Easy come, easy go. Classic lyrics from Freddie Mercury. But unfortunately, that's how a lot of customers are feeling today. Loyalty has been disrupted. In fact, 77% of people say that they would rather switch brands today than they would 3 years ago. Now, there are three main reasons for this. The first, you and I, people, our expectations are changing. We expect instant gratification and personalized experiences. Secondly, is a rise of disruptors that are ramping up competition in every single sector. And then lastly, is the deregulation that's actually enabling and encouraging brands to thrive. So let's talk about people and how our habits and behaviors are changing. Our expectations are being redefined by brands like Amazon, especially when you think about the speed of transaction and delivery. You know, once you've experienced one-click buying and same-day delivery, you don't go back. And actually, that immediacy is the new standard. And the bar is irreversibly higher than ever before. And those brands that can't meet that expectation, well, customers become less loyal. Secondly, is around people are choosing experience over product. And what we mean by that is actually many markets, let's take telco, fintech, financial services, even travel. These brands in the consumer's eyes are being highly commoditized. And so the need for something like a customer experience or a user interface that differentiates that brand from one another is key. And then lastly is about brands are being held accountable more than ever before. Consumers are putting them to the test. You know, first we saw the rise of comparison, but actually we see this on Facebook as well. You know, within only a couple of minutes, 20 to 30 friend recommendations you can receive about where do you want to go on holiday, where do you want to eat, or even the next car that you buy. And these things are key in the way that we act. And so brands are being put under the test, and brands are changing. And what we need to do with businesses, consumers changing, businesses need to change too. Secondly is the rise of disruptors, and that's fueled by technology. And that's key when you think about how they're challenging the status quo faster and more efficiently than ever before. Think about the things like AI. If you think about AI and the way that we're helping small brands find the right customer at the right time at scale. Now, just to give you a sense of this disruption that's going on Facebook alone, there are 70 million business pages, and that continues to grow. In fact, 35,000 new business pages are created every single day. By the time I finish this keynote, probably another 5,000 would have been created on the platform. Now, people are looking to brands in a way that instead of searching for brands, they're actually discovering brands. And that's through things like the newsfeed. And so brands are now able to be discovered by searching for customers, and they're doing it through the newsfeed, and they're able to disrupt an entire industry. And then lastly is the deregulation that we're seeing. And I'm sure many of you will be well aware of open banking, the directive. But actually what we've seen there is that's encouraging and creating different and new business models to disrupt the ecosystem that existed before. And so you've got consumers now that can get access to information, financial services, faster, more accurate than ever before. And then on the other side, it's encouraging brands to come in and disrupt the model. Things like Starling, TransferWise, or Anorak.
Thank you for holding. One of our advisors will be with you shortly.
Thank you for continuing to hold. Your patience is appreciated.
Sound familiar? So 52% of consumers would switch providers in the past year due to poor customer service. Now, I'm sure the weekend just gone, there's probably hundreds, if not thousands of people that were getting irate, put on hold, watching their precious Saturdays slip away. And actually, that's because it's important from a customer experience perspective that we remove those pain points. And that's critical to the way in which brands can survive. In fact, it's not what we say, it's what we do. And what we do is critical. And it's more around the customer experience is the most powerful thing in a way that you can erode or build a brand. And so what we say in a mobile-first world is constantly being put to the test, and the stakes are very high. In the UK, the estimated cost of customers switching due to poor customer service is more than £200 billion. And so it's critical we get this right. This isn't around loyalty in a traditional sense. This isn't about getting our existing customers or top customers to spend more. This is about attracting and retaining customers so that we, in an environment where the competition is fiercer than ever before and consumer expectations have never been higher. It's staggering to think that in 2020, millennials, 50% of the workforce will be millennials, and their expectations are that brands provide a consistent and accessible way through the channels that they use to serve them new services. So, it's about making sure that we are where our customers are, using the channels that they use, and be considerate of their time. And we see this shift happening on Messenger. So Mark Zuckerberg recently announced that over 100 billion messages were being sent across Messenger and WhatsApp. Now, just to put that into perspective, SMS delivered at the same period in a single day, 20 billion during its prime. Across businesses and consumers, there's over 10 billion messages being exchanged every single month globally. And so that's shifting the consumer expectation. The consumer has a preference for actually going messaging versus phone or email. So Nielsen did a study in 2016 where they ran a study and they got 64% of people that use messaging apps said they would prefer to use messaging over phone and email. And so if we want to be where our customers are, we need to use the channels they're using, and actually messaging needs to be a critical part of that solution. And so I'm going to take you through a few case studies to give you an example. This is Allianz. Now, Allianz wanted, the insight here was about creating a frictionless experience where they removed the form filling. I've not met anyone yet that likes form filling. And so by creating more of a conversational, basic AI through Messenger, they were to generate and capture the information across Messenger in less than 2 minutes. And in doing so, they were able to then generate automatically a quote within 30 seconds. And the key thing there is then they were able to hand off to the agents either by click to call or arrange a call. Secondly is Globe Telecom. Globe Telecom wanted to get closer to their existing customers and create more of an immersive experience in their everyday lives. And so, and knowing that these customers were on Messenger meant that they could exist where the customers were living their lives. And by doing so, they created 2 different hybrid bots, G and also Thea. G looked at creating more of a basic customer service notification, whereas Thea was looking more as a client concierge for their top-rated customers. And you can see there, increased the Net Promoter Score, the NPS scores, by 25%, and reduction of 50% in those people that use Messenger through their call center. First Car Quote. Now, First Car Quote is was created by Admiral Insurance, one of the largest insurers in the UK. The key thing here is that they saw a new market. They wanted to go after young drivers, and they felt they weren't being served through the right channels. And so working with First Car Quote and Admiral, we created the messenger bot, again, a basic messenger bot to capture the car insurance details, to actually generate a quote there and then on Messenger. Messenger is persistent, and what that means, it allows you to go between different devices at any time and pick up the conversation from where you left off, not potentially like other providers. And through First Car Quote, we managed to increase the quotations by more than 30%. And those quotations then converted, more than 50% converted into policies in comparison to the traditional legacy channels they used. And fundamentally, they reduced the cost to serve. And finally, it has nothing to do with financial services, but actually it's one of my favorites. I'm sure most of you, if not all, are Lego fans. Lego introduced this, or experimented with some basic AI last Christmas, and this is called Ralph the Gift Bot. And what Ralph does is it's based on an insight that whilst we all love Lego, it's hugely overwhelming, the amount of product and choice that you have to choose. And so Ralph takes you through a series of questions, either for the gifter or someone that essentially just wants to buy some Lego. And it asks you the country they're at, asks you the age in which your prospective gift is going to, and also the price point and the themes that you want to use. I'll let it play just so you can have a little read. So you can see here, you can choose the different themes across all the different Lego catalogue. And once you choose that theme, it then takes you into the next level as to the different elements and the different products. And try it yourself, by the way. So Lego Ralph Bot is not just for Christmas. He's for life now, so he's up and running. And people are constantly using it in a way to pick Lego for friends and family. And what makes this even more frictionless is that once you've selected the product, and you'll see this here, the product automatically goes into the Lego shopping cart. So it creates a completely frictionless and instant experience for the consumer to then go on and purchase. And what did that do for Lego? Well, it increased the return on ad spend versus when they were just doing it through basic click ads by more than 3x. And more importantly, through creating that experience, they're actually enticing customers to actually spend more with the brand, nearly 2 times more in terms of the basket value. So, loyalty is being disrupted. It's being challenged across every sector. Customers' expectations are changing, the rise of disruptors, and of course, regulation. For us, and the last thing, is poor customer experience. For us, what we believe the right thing to do is build fast, build convenient, and build personal customer experiences. Thank you.